We want to turn our attention back to that breaking news. The Financial Times reporting China's internet regulator is telling the country's biggest tech companies to stop buying NVIDIA's AI chips and terminate any existing orders. CNBC senior tech correspondent Arjun Kapal joins me now with much more on this story. Arjun, what does this mean for the company in the near term, at least? We do see the stock lower, but we have seen some volatility in the stock in recent weeks as well.
Well, look, it's adding to more and more geopolitical uncertainty for NVIDIA, which has been a bit of a roller coaster ride. It was first not allowed to export its H20 chips, which were specifically designed for China, to China. Then it said it would be allowed to do so on condition that it give up 15% of those revenues to the U.S. government. And now the FT reporting that a specific chip known as the RTX Pro 6000D, which was designed to effectively replace the H20, is being Chinese regulators, the Cyberspace Administration of China, is telling Chinese companies not to buy the chips. What we see from the report is that apparently there are tens of thousands of orders for these chips. These companies such as ByteDance and Alibaba and others began testing these chips, but the CAC has now told them to stop and postpone those orders as well. And look, this is all speaking to the broader theme here, Frank, of tech independence in China. Beijing is really trying to push its homegrown domestic companies to rely on more and more domestic technology from companies like Huawei, which has developed its own AI chips to compete with NVIDIA, as well as what I reported last week, which was Alibaba developing a new generation of AI chips as well. So a lot of action happening at that market. The FT report also gave details on a meeting that was recently held between Beijing and some of those chip makers in China. They got them all together to assess how far Chinese chips have come versus the NVIDIA products that are available in China. And they concluded that actually the performance is comparable and sometimes exceeding the level of what they're seeing from NVIDIA. So there's this broader theme here from a push from China to really become more independent in technology, and that is causing a lot of uncertainty around the future of NVIDIA's market in China, Frank.
All right, Arjun Kapal, live in London. Again, new report from Financial Times that the Chinese internet regulators told the country's biggest tech companies to not buy NVIDIA chips. You're looking at NVIDIA shares pulling back about 0.75%. All right, let's talk about this and much more now with Craig Johnson, Chief Market Technician at Piper Sandler. Craig, good morning. Good to see you.
Good morning, Frank.
All right, Craig, we do have to talk about this news that's just crossing about the Chinese internet regulator telling those companies not to buy NVIDIA just because of the sheer size of NVIDIA and its weight in the market. If we see NVIDIA moving lower on this report and maybe some pressure on the stock going forward, how does that shape your view of the market in general?
Well, Frank, a couple things first. I think a lot of investors and a lot of analysts have sort of backed out a lot of those orders from China. So while there'll probably be some impact to NVIDIA shares, I look at the pre-market right now and, we're off maybe $1 or $2 at this point in time. But technically, Frank, we need to see some sort of break below 155 on NVIDIA shares for it to really be technically significant sort of breakdown. And at this point in time, you would sort of look at that and say, it's a check back to support at this point in time.
All right now. We see NVIDIA shares down about 1%. How meaningful is this, at least in the near term, for NVIDIA sales? Because we keep hearing that Chinese sales, they weren't really factored in the guidance. So why is the stock moving like this in the pre-market?
Yeah, look, it's a shot across the bow, obviously from Beijing. But look, part of the issue here is that, and we see it, all the big Chinese tech players, they're going to want NVIDIA's chips, right? I mean, there's one chip in the world fueling the AI revolution, but it speaks to this sort of balance that you're going to have to see. A lot of sort of regulatory scrutiny. But when it comes to, look, when you look at the upside, how you get to a $5 trillion market cap for NVIDIA, China is a key part of that story. But I believe here the bark will be ultimately worse than the bite.
All right. I know this is just crossing again. China's biggest internet regulator is telling domestic firms to stop buying NVIDIA chips, terminate existing orders. According to this FT article, Beijing, and this is their words, they summoned domestic chip makers, including Huawei, Cambricon, and Alibaba and Baidu, and kind of tested those chips and found they were at least comparable to the NVIDIA chips. I know it just crossed, but have you heard similar things coming out of China that they already have chips that are at least comparable? Maybe not at the exact same level, but comparable.
Yeah, Frank, they're comparable. Like, I'm playing Bethpage Ryder Cup in September. I mean, the point is, like, NVIDIA's years ahead of these other chips. And look, that's the reality, right? I mean, there's some grandstanding going on there. And that's why when you look at these Chinese tech stalwarts, they want that NVIDIA chip. That's the new gold or oil. And that's some of the challenge that Beijing's going to have here. Remember, Trump administration knows the biggest chip on the poker table that they have are the NVIDIA chips.
All right, we're going to go to our Eunice Yoon live in Beijing right now on the CNBC Newsline. Eunice, good morning. Can you share with us the latest that you're hearing there in China?
Frank, what we see in this FT report is that China's cyber watchdog is ordering local companies not to use an advanced chip by NVIDIA that's used for automated manufacturing. This is called the RTX Pro 6000D. The newspaper says that this is because the regulators want Chinese companies to use similar chips that are produced by Chinese companies, and this would include Huawei. Jensen Huang on a trip in Beijing introduced this chip in July, and what's interesting, I think, is that this report follows news earlier this week when regulators had said that NVIDIA violated antitrust law. And it also comes after we've seen similar pressure by the government to dissuade Chinese companies from using NVIDIA's H20 after the Trump administration had changed its policy and allowed NVIDIA to sell the product in the summer. So if this is true, this is part of a decades-long effort by China to become more.
You know, I just heard, I think we may have actually lost Eunice on the news line.
But let's start with what we're hearing out of China right now. The story in the FT has NVIDIA shares. I think they're down by about $3 on the implied open on this. And it comes out that the Chinese authorities are saying, don't buy NVIDIA chips. We want you to buy homemade ones instead.
Yeah, on the surface, it might look like classic import substitution. Chinese want to be protectionist. On the other hand, they don't really have the near-term alternative. Look, we're what is it, mid-September? 6 weeks away from some type of a meeting between President Trump and President Xi Jinping. Whether there's actually a summit is still being negotiated between the two sides.
Right.
I assume this is part of the skirmishing, the run-up, the setting of the table for a much larger U.S.-Chinese conversation.
Just putting everything out there, dumping everything, like kitchen sinking it, basically.
And it's a reminder that, like with rare earths and other things, China has, shall we say, a lot of pushback to play the game.
All right, NVIDIA just commenting on reports that Chinese regulators told the country's tech giants to stop buying all AI chips from NVIDIA and to cancel existing orders. In a news conference, CEO Jensen Huang said, "We can only be in service of a market if a country wants us to be." He said that they continue to be supportive of the Chinese government and Chinese companies as they wish. And he said he's disappointed with what he sees. However, he says there are large agendas to work out between China and the United States, nodding to the idea that this is a company that has gotten caught up with much bigger both trading issues and security and national defense issues between China and the United States. It is the company that seems to be targeted most at the moment by the Chinese side of things. We heard earlier this week about an investigation of Chinese authorities looking into whether NVIDIA had been displaying monopolistic behavior. And again, we don't know the details on that, but the supposition is that it's all related to these trade talks with the United States at this point.
All right, I hope you're all doing well today and staying calm in this market. Today, the Financial Times is reporting that China's internet regulator has ordered companies to stop ordering NVIDIA's AI chips. Looking into the details of the article, it appears this order has to do with NVIDIA's RTX Pro 6000D that they announced earlier this year for China. As far as I'm aware, this order applies to that chip, but not to the H20 or the rumored B30, a Blackwell chip. According to this same report from the FT, Jensen said he expects to speak with the president this evening about NVIDIA's China market access, possibly about allowing a new Blackwell chip into China. The FT says that Chinese regulators believe that China's domestic alternatives are already comparable to the performance of NVIDIA's chips that are already allowed into China under current export controls. I honestly think this news is just more of the back and forth between the US and China, and possibly an attempt by China to get the US to allow a better chip into the country than the H20. I don't know. It could also also be China trying to give themselves more leverage ahead of US-China negotiations. I think this whole situation will eventually be resolved. The important thing to remember is that based on NVIDIA's Q3 guidance, business is accelerating even without any H20 sales to China. Therefore, any China revenue would be additional upside to what is already a solid long-term setup. And at the same time, a lack of China revenue does not derail the long-term thesis surrounding NVIDIA and the build-out of AI data centers. Now I want to recap the news that broke yesterday evening when NVIDIA, along with multiple other US tech companies, announced massive AI investments in the UK. NVIDIA announced in a press release that they are partnering with Nscale to scale up 300,000 NVIDIA Grace Blackwell GPUs worldwide with up to 60,000 GPUs in the UK. NVIDIA, along with partners, including Nscale and CoreWeave, will invest up to $15 billion in UKI factories with up to 120,000 NVIDIA Blackwell GPUs to power initiatives such as OpenAI's Stargate UK. NVIDIA also announced teaming up with Oxford Quantum Circuits to build a quantum GPU AI supercomputing center. NVIDIA and Tech UK are also launching an R&D hub to accelerate the nation's AI and robotics ecosystem. In that same press release, NVIDIA said Stargate UK will feature Blackwell Ultra GPUs operating in Nscale's UK data centers by 2026. Nscale and Microsoft also announced plans to build the UK's most powerful supercomputer with more than 24,000 NVIDIA Grace Blackwell Ultra GPUs. CoreWeave also announced today that they will establish an advanced data center in Scotland with Grace Blackwell Ultra GPUs. And we were also told that many AI robotics companies in the United Kingdom are utilizing NVIDIA's products and software as they work to advance physical AI. All of that to say that this is a very large, multi-pronged AI investment in the UK, and it is very good news for NVIDIA as their products are involved throughout this massive AI initiative involving all of these tech companies. As I've been saying for months now, I really like the setup for NVIDIA through the remainder of this year into 2026 for multiple reasons. One reason is that we should start to see revenue from certain sovereign AI deals show up either as revenue or revenue guidance in NVIDIA's Q3 or Q4 reports. In addition to sovereign AI, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. And I'm also expecting a surge in compute demand fueled by agentic AI that extends well into 2026. Jensen seems to agree with this, as he said on last month's earnings call that he expects reasoning agentic AI to be a major growth driver in 2026. Those are three reasons I really like the setup through the rest of this year into 2026. Certain sovereign AI deals converting into revenue, Blackwell Ultra's production ramp, and a surge in compute demand fueled by agentic AI. Looking ahead, we have NVIDIA GTC in Washington, D.C. with a keynote from Jensen Huang scheduled for October 28th. Jensen told us on the NVIDIA earnings call that he is anxious to share more details about Rubin with us at GTC. I also hope that we get an update on NVIDIA's progress in quantum computing at GTC, as there have been a lot of reports recently about NVIDIA's involvement in quantum. Jensen told us earlier this year that NVIDIA is already working with just about everyone in the quantum industry on NVIDIA's CUDA-Q platform. Jensen also told us that the next generation supercomputers will have a QPU assigned with QPUs connected to GPUs. All of that to say that I'm looking forward to learning more about NVIDIA's progress in quantum, and I hope we'll get an update at GTC in October. I continue to be bullish on NVIDIA long-term, and I seriously think that NVIDIA's long-term growth is still being substantially underestimated by most analysts. Of course, I expect NVIDIA's data center business to continue growing strong amid massive AI demand and a growing need for more compute as new use cases are developed. But another reason I think NVIDIA's long-term growth is being underestimated is that NVIDIA is really just starting to capitalize on multiple major growth opportunities. Sovereign, enterprise, AI-native startups, physical AI, and quantum computing are all massive opportunities for NVIDIA. I'm completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business, which is crazy to think about. There are largely three phases to producing physical AI. Models are trained on NVIDIA DGX. Then those models are taught, tested, and their skills validated through NVIDIA Omniverse. And then the models are run on device through NVIDIA AGX. Notice that NVIDIA is providing a holistic platform solution and establishing themselves as the indispensable foundation of physical AI. And physical AI is likely going to be the biggest wave of AI yet. NVIDIA expects the world to eventually be filled with 100 million self-driving cars, billions of robots, millions of factories, and hundreds of thousands of warehouses utilizing physical AI. This is going to fundamentally change society as we know it, and NVIDIA stands to benefit massively. I think most analysts are substantially underestimating NVIDIA's future growth in physical AI and quantum computing. Right now, Blackwell Ultra is ramping very quickly. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory build-out between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all all of this. I don't think we are anywhere near any type of bubble bursting type of event. Plus, remember how I mentioned that NVIDIA has multiple large growth opportunities ahead. It's important to keep in mind that as new use cases are developed, the need for compute from NVIDIA will grow even stronger. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.